Hello and welcome to today's market update. Let's start with the numbers. The Nasdaq 100 ETF closed at $705.88, the S&P 500 ETF at $738.65, and the VIX Volatility Index settled at 17.79, indicating relatively calm sentiment. However, the 10-year Treasury yield has climbed to 4.62%, a number that deserves your attention. The dollar index edged higher to 99.26, while WTI crude oil stood at $103.31 a barrel. COMEX gold remained elevated at $4,525.50 an ounce. Bitcoin traded at $76,822.53 and saw a decline today. So what is the core takeaway? The market is clearly diverging. The Shanghai Composite rose 0.92%, showing notable strength, but Bitcoin fell 0.77%. This contrast tells us that global capital is not moving with a unified risk appetite. Instead, we are seeing a structural rotation. Money is flowing out of overvalued U.S. tech stocks and cryptocurrencies, and quietly moving into A-share value blue chips. The probability of this directional shift is above 65%. On the macro front, the rise in the 10-year yield to 4.62% is putting direct pressure on growth stock valuations. That is a bearish signal. The dollar index is only slightly stronger, but it has ended the earlier expectation of a weaker dollar, reducing the likelihood of a broad rally in risk assets. On the positive side, inflation concerns have not worsened. Crude oil and gold are consolidating at high levels, suggesting that market anxiety over inflation is stabilizing. Geopolitical risk premiums remain priced in, which is why gold and oil continue to find support at elevated levels. Looking at individual assets, U.S. equities are in a high-level consolidation with a weak bias. The QQQ is showing signs of exhaustion around $705. Key support sits at $693, while resistance is at $710. In China, the A-share market is showing, driven by domestic capital. The Shanghai Composite rose on increasing volume, but the Chi-Next index edged lower. This clearly indicates a style shift from growth stocks to mainboard value stocks, a classic characteristic of domestic investor behavior. Bitcoin is a leading indicator of weakening risk appetite. If it breaks below $75,000, it could trigger a sell-off in tech stocks. This is a risk worth monitoring. The capital flow themes are very clear. The first theme is going long on A-share value blue chips and shorting overvalued U.S. tech stocks. This trade has strong continuity and a probability of 70%. The second theme is rotation from risk assets into value and safe haven assets. Gold staying at high levels is the best evidence of this. There are two key battlegrounds today. The first is the Shanghai Composite's 4,200-point level. A breakout on strong volume would attract more trend-following capital. If it fails, we could see profit-taking. The second is Bitcoin's $75,000 support level. A decisive break below this level would confirm a short-term top. On the risk side, we need to watch the sustainability of the A-share rally. If the Shanghai Composite consolidates below 4,200 on shrinking volume, or if foreign capital flows out significantly through the Stock Connect programs, the domestic-driven rally logic could fail. Also, if U.S. inflation data comes in hotter than expected, pushing the 10-year yield above 4.75%, the pressure on the Nasdaq would be severe. Today's strategy preference is hedging, with a confidence level of 70%. Consider building a pair trade that is long the CSI 300 ETF and short the Nasdaq 100 ETF. Execution signal is when Bitcoin confirms a break below $75,500. If the Shanghai Composite breaks above 4,200 on strong volume while the QQQ drops below $700, you can increase the position. If A-share momentum fades on shrinking volume, or if Bitcoin returns above $77,000, reduce exposure. If the QQQ breaks above $715 while the Shanghai Composite falls below $4,100, the market logic has fundamentally changed, and you should close the position immediately. Let me give you some verifiable predictions. The Nasdaq 100 ETF is unlikely to break above $710 in the next 48 hours, with a 65% probability of retesting the $693 support. The Shanghai Composite will attempt to attack 4,200 points today, but will likely close below that level without a meaningful volume expansion. Bitcoin has a 65% chance of breaking below $75,000 in the next 24 hours. Gold will hold above $4,500. Overall, the probability for today is 25% up, 50% sideways, and 25% down. The capital rotation is accelerating, and the direction is clear. Please prepare accordingly.